We have already seen that any interest debited once a loan account becomes NPA, the interest debit is to be reversed to debit of income account. And again I am dwelling on this reversal of income. Any interest debited to NPA account and taken to income account to be reversed as per RBI norms. These are international norms followed by Basel, and RBI also followed this. The basic idea in this regard is that when the borrower is not able to service the interest, then there is no point in further debiting that loan account. He is not going to service the interest. Is he going to pay back my principal or interest in future? So that's why anything debited which is not serviced, it is to be reversed and reversed to debit of income account. If any advance including bills purchased and discounted becomes NPA, the entire interest accrued and credited to income account in the past period should be reversed if the same is not realized. This will apply to government guaranteed account also. It means there are two things. The moment it becomes NPA, I am not going to debit further debit, and from the it relates back, the 90 days relates back. Probably I charge monthly interest April, May, June, but April interest is not serviced. I wait for 90 days, and 91st day the account becomes NPA. So whatever the interest debit that has taken place April, May, June, it should be reversed to the debit of income account. Again the basic premise is that when he is not going to service his interest, how he is going to service the principal amount? That's a big amount. In respect of NPAs, fees, commission and similar income that have accrued should cease to accrue in the current period and should be reversed with respect to past periods if uncollected. Same rule is for fees and commissions. Leased assets, the finance charge component of finance income as defined in AS 19. AS 19 means accounting standard 19. Lease accounting IAS 19 leases issued by Council of Institute of Chartered Accountants of India, that is ICAI, on the leased assets which has accrued and was credited to income account before the asset became non-performing and remaining unrealized should be reversed and provided for the current accounting period. Same thing, whatever the lease I have taken to income account, I wait for 90 days, 91st day for non-receipt of the lease rental, the account becomes NPA, so entire is to be reversed to debit of income account. Appropriation of recovery in case of NPAs. Interest realized on NPAs may be taken to income account provided the credits in the accounts towards income are not out of fresh or additional credit facilities sanctioned to the borrower concerned. Again I repeat, interest realized on NPAs may be taken to income account provided the credits in the account towards interest are not out of fresh or additional credit facilities sanctioned to the borrower. It means an account has become NPA. From accrual concept, I cash to cash concept. It means the moment any money is remitted by the borrower, that can be taken to income account, because the interest not debited will be debited now, it can be taken to income account. But that credit, fresh credit, should not be out of a loan given by the bank. It's called evergreening. It means I should not rectify a NPA by giving further loan. So that's why it very clearly says that the credit should not be out of the credit facility sanctioned by the bank, it should be a cash flow from the borrower. In the absence of a clear agreement between the bank and the borrower for the purpose of appropriation of recoveries in NPA, that is towards principal or interest due, the bank should adopt an accounting principle and exercise the right of appropriation of recoveries in a uniform and consistent manner as stated in the accounting principles. This is called Clayton's rule. What we say, when the account has become NPA, when he is remitting, that remittance should, whether it should appropriate to interest, is it should appropriate to principal or any other charges, there should be a recovery policy of the bank. Any policy should be board mandated, and as per the prescription of these policies, the recovery should be apportioned. Now let us move on. Even though it becomes NPA, even under NPA there are different categories. What are the categories? Let us see. Categories of NPA. Banks are required to classify non-performing assets, that is NPA, further into following three categories based on the period for which the asset has remained non-performing and realizability of the values. So based on this period, nothing happens. The NPA, to start with, it goes to substandard. There's a time period for that. Beyond that, it moves to doubtful asset. In doubtful assets, there are doubtful 1, doubtful 2, doubtful 3. From there, it moves to loss assets. So again repeat, what are the categories of NPA? Substandard assets, doubtful assets and loss assets. Now let us take for discussion what is the meaning of substandard assets. With effect from March 31, 2005, a substandard asset would be one which has remained NPA for a period of less than or equal to 12 months. Such an asset will have a well-defined credit weakness that jeopardize the liquidation of the debt and are characterized by the direct possibility that the banks will sustain some loss if deficiencies were not corrected. It means the time difference between a performing asset or a non-performing asset is only 1 day. Till 90 days, the account is standard. For non-receipt of some interest or principal or EMI, the next day the account becomes NPA. It means NPA, the first stage is substandard, and the substandard, my idea is that I want to correct the borrower, correct the any deficiency in the loan account. All the amount is not lost. Some amount, some education is given to the borrower. This account can brought back to performing asset. That's why with effect from March 31, 2005, a substandard asset would be one which has remained NPA for a period of less than or equal to 12 months. It means today it has 31st March, the money has to come. It has not come. 1st April, the account becomes NPA. Not only it becomes NPA and it falls in the first category of NPA substandard, then I wait for 12 months, 1st April to 31st March next year. If nothing comes, then this account from substandard, it moves to doubtful. Let us think that an account has become NPA and I waited for, from the period it slipped to substandard, the bank waits for 1 year, nothing happens. So maximum period, a NPA, a substandard, it can continue in substandard categories 12 months. And nothing happens from the borrower or from the securities, this account moves to doubtful assets. With effect from March 31, 2005, an asset would be classified as doubtful if it has remained in the substandard category for a period of 12 months. A loan classified as doubtful has all the weaknesses inherent in assets that were classified as substandard. What is inefficiencies or inherent defects that is in the substandard? Probably that continues in doubtful or it gets magnified with the added characteristics that the weakness make collection or liquidation in full or on the basis of currently known facts, conditions, values highly questionable and improbable. It means the health of the borrower or health of the collateral, it becomes weak in doubtful assets when compared to the period under which it was parked under substandard assets. So I wait for 12 months in substandard, nothing happens, it moves to doubtful category. So doubtful category also there are 3 classes, doubtful 1, doubtful 2, doubtful 3, that we will see afterwards at the time of provisioning. So now let us think that nothing happens from the borrower or I am not able to recover anything from the collateral. Now after it lives in doubtful assets, it moves to a third classification called loss asset. A loss asset is one where loss has been identified by the bank or internal auditors or external auditors or RBI auditors, but the amount has not been written off fully. It means it lives in the funded facility of the bank, but there are no cooperation or no remittance from the borrower. The collaterals which are risk mitigants or my friends, from that also I am not able to recover, then it goes to loss asset. Again to repeat, a loss asset is one where loss has been identified by the bank or internal or external all auditors including RBI inspection, but the amount has not been written off fully or wholly. In other words, such an asset is considered as uncollectible and of such little value that its continuance as bankable asset is not warranted, although there may be some salvage or recovery value, and collateral continues to be there. I am not able to recover or I am able to recover some little value, then there is no point in continuing the asset continuously, either as substandard or doubtful, it slips to loss asset. Now some accounts can slip to NPA because of temporary deficiencies. It means some temporary deficiency are non-renewal of accounts or I have given some ad hoc facilities that is not regularized. These are all called as temporary deficiencies. The classification of an asset as NPA should be based on record of recovery. Banks should not classify an advance account as NPA merely due to existence of some deficiencies which are of temporary in nature, such as non-availability of adequate drawing power based on latest available stock statement, balance outstanding exceeding the limit temporarily, non-submission of stock statements, and non-renewal of the limits on the due dates, etc. So these are all called as temporary deficiencies. We have seen an account becomes NPA because of some temporary deficiencies also. Let us see what are the temporary deficiencies. It means the actual deficiencies are that repayment not forthcoming from the borrower is the actual deficiency. But there are some temporary deficiencies which may also force a loan account to become NPA. What are the temporary deficiencies? Non-receipt of stock statement for a cash credit account, non-renewal of a limit. What RBI says that any limit is subject to review or a renewal once in a year. If that is not done, or a sanctioned limit is there, the branch manager gives further ad hoc limit, how long it can be continued, the ad hoc it goes unchecked, then it is all temporary deficiencies that makes all the three the credit facility to go and slip into NPA. In the matter of classification of accounts with such deficiencies, banks may follow following guidelines. So with regard to temporary deficiencies, if not corrected, RBI has come out with some norms when the account becomes NPA. Let us see that. First, in case of with regard to cash credit account, which is basically supported by stock statements, in case of if the cash credit is given against stocks, or if it is given against book debts, assignment of book debts, again we have to give the book debts receivables outstanding. Normally banks collect these stock statements or these book debt statements once in a month. Banks should ensure that drawings in the working capital accounts are covered by the adequacy of current asset, since current assets are first appropriated in times of distress. When the borrower is in problem and he first realizes the current asset, and that goes for mitigating his loans, not the loans of the bank. That's why any distress comes, the current account becomes cash, the cash is taken by the borrower. And bank should ensure that drawings in the working capital accounts are covered by the adequacy of current assets, since current assets are first appropriated in times of distress. Drawing power is required to be arrived at based on the stock statement, which is current. It means probably March statement, and you fix the drawing power within the first week of April. So it should be current and not March statement, the DP is arrived after 3 months. It should be done immediately. Bank should ensure that drawings in the working capital accounts are covered by the adequacy of current assets, since current assets are first appropriated in times of distress. Drawing power is required to be arrived at based on the stock statement, which is correct. However, considering the difficulties of large borrowers, stock statements relied upon by the bank for determining the drawing power should not be older than 3 months. It means bank also appreciates the problem of the borrower. Every time he has to take a stock statement and he has to come out report that to the bank. That's why bank permits the March or April December stock statement. He gives 3 months. The DP can continue for January, February, March. So 3 months can be linked to one stock statement. However, considering the difficulties of large borrowers, stock statements relied upon by the banks for determining the drawing power should not be older than 3 months. The outstanding in the account based on the drawing power calculated from the stock statement older than 3 months would be deemed as irregular. A working capital borrower account will become NPA if such irregular drawings are permitted in the account for a continuous period of 90 days, even though the unit may be working or the borrower's financial position is satisfactory. This account becomes NPA. Let us give an example. 31st December I received a stock statement. Based on a DP is arrived. That DP I continue for 31st January, 28th February, 31st March, 3 months ho gaya, and still either the borrower has not given the stock statement. It means 1st April the DP which is fixed based on the 31st December stock statement, it becomes irregular. So from April 1st you give 90 days, the 91st day this account becomes NPA simply for non-receipt of stock statement from the borrower, or the DP which is fixed based on December statement which continues for 90 days. It means January, February, March, April, May, June, 1st July this account becomes NPA. Now we have seen how an account becomes NPA, temporary deficiency, based on the drawing power fix which is irregular. Now let us move on to non-renewal of credit limits. I have already told you RBI says that every credit facility, whether fund based, non-fund based, it should be subject to review once in a year. Regular and ad hoc credit facilities need to be reviewed or regularized not later than 3 months from the due date or date of ad hoc sanction. In case of constraints such as non-availability of financial statements and other data from the borrowers, the branch should furnish evidence to show that renewal or review of credit limits is already on and would be completed soon. In any case, delay beyond 6 months is not considered desirable as general discipline. Hence, an account where the regular or ad hoc credit facilities have not been renewed within 180 days from the due date or the date of ad hoc sanction, it will be treated as NPA. Let us think that the renewal falls on March. I wait for the financial statement. Normally it will not come immediately. I can wait for 3 months. It is not coming. Still I wait for 3 months, that is 6 months. Simply I have not renewed the credit facility. Probably the justification is I have not given the financial statements. Then RBI says no, with 6 months is sufficient period for renewing a credit facility. Simply for not renewing this facility, the account becomes technically NPA. Again, let us think that a due credit facility is sanctioned, a regular limit is sanctioned, probably from head office or regional office, zonal office in a branch, say 100 crore or 200 crore. Now branch managers are empowered to give some ad hoc temporary 10%, 5%. Let us think that this is an 100 crore facility. Branch manager has got 10% to give ad hoc. So he gives further 10 crores. So the 100 crores become 110 crores. So the 10 crore is the ad hoc limit. The 100 is the regular limit. This 10 crore given should be adjusted within 180 days, or the branch manager should put up one more proposal to the head office or regional office or higher authority, get this limit regularized from 100 to 110, or either there are two things, either this 10 crore should be adjusted to 180 days, or this limit should be enhanced from 100 to 110 from the sanctioning authority. If both these things are not done, I wait for 180 days, 181st day, this account becomes NPA. The borrower position is good, his remittances are good, the entity is working well, his factory is doing well, he has got good orders, but in spite of that, simply for non-renewing this credit facility for 180 days, or not adjusting this ad hoc for 180 days, or not regularizing this ad hoc limit into regular limit, this account slips into temporary NPA. Let us come to upgradation of loan accounts classified as NPA. It means that once an account becomes NPA, that the rule is not that once the NPA, not always the NPA. It is based on the recovery. So there is a critical amount. Suppose an installment is not serviced, and because of non-servicing that installment, the account slips to NPA, and once the borrowers he services all the pending installments, the account can be again classified or upgraded as performing asset. So if arrears of interest and principal are paid by the borrower in case of loan accounts classified as NPA, the account should no longer be treated as non-performing and can be classified as standard account or a performing account. Account regularized near about the balance sheet date. The asset classification of borrower accounts where a solitary or a few credits are recorded before the balance sheet date should be handled with care and without scope for subjectivity. It means, let us think that 31st March the bank is finalizing the balance sheet, and the auditor finds that some remittances have come, far and few, only to evade or take the auditor for a surprise. Let by this remittance we will continue this as performing. So these accounts should be very put under scrutiny of the auditors very closely. The asset classification of borrower accounts where a solitary or a few credits are recorded before the balance sheet date should be handled with care and without scope for subjectivity. Where the account indicates inherent weakness on the basis of the data available, the account should be deemed as a NPA. In other genuine cases, banks must furnish satisfactory evidence to the statutory auditors, inspecting officers, there may be concurrent auditors or there may be auditors from RBI, about the manner of regularization of the account to eliminate doubts on their performing status. If there is a doubt that arises from the auditors, at least the branch manager or sanctioning authority should show them in a transparent way how this is treated as performing asset.